Hello, everybody, and welcome to our special edition of Secrets of Successful Traders. This is part of an ebook that is being put together by our friends at Metastock. A very big thank you to Jeff Gibby and his team for allowing us to be on here. My name is Raul Aurora. I'm one of the traders here at TradingWins, and I'm the developer of the velocity system, which if you're seeing my screen right now, you will see on there greens and reds, I'm sure you're familiar with. But today, I want to talk a little bit about support and resistance and how you can use support and resistance really with any system that you're using. It doesn't have to be one of our systems that we have here at TradingWinds, but I think it is a core and fundamental concept of technical analysis. And you can even see just by looking at this chart here, we're going to start with the SPY, and we're going to show you how you would have looked at some of these trades through the lens of overcoming resistance or finding support depending on the direction in which you're going. So if we go back to the beginning of 2025, let me go and compress the chart a little bit so you can see exactly what had been happening. Through 2024, we had a nice little stair step up along the way. So if we go back a little further, you can see there's July. We had a bit of a dip. Now, if you notice, this dip looks a little bit like this dip here. This one took place a little later. Excuse me. This took place a little later in the year, and this was a little earlier. For those of you playing along at home, you probably can guess what was the cause of this dip here, and it was Liberation Day when we had all this information coming in about tariffs. The market got spooked. A couple of weeks later, the narrative changed on the whole tariff situation. We had an extension in April here to July. That extension from July was then moved to August. As we record this video on the 24th of July, things are a little bit more stable in terms of where we are with tariff deals and things of that sort. So this is, as I mentioned, our velocity system here. So you can see green, all the bars colored green mean that we are in a long position. So we hit a high sometime in the middle of Feb. And then we had this move downward. Now we get a little bit of anxiety here if we're long on the market as we get our first red bar. The way I'm going to look at this is I'm going to see, have we broken a previous level of resistance or previous level of support in this case because we're on the way down? And can I find a clearly defined pivot low to my left? And if I zoom in a little bit here, you can see this pivot low comes in right around the 581 level. We get our first red candle right around the 555 level. So my ideal situation in this is I want to look at it with two different lenses. One is, am I breaking a clearly defined pivot low? And in this case, I am. And do I have lower highs and lower lows prior to this entry here to the short side? So if I count 1220, that's December 20th, 2024, as a very clearly defined major pivot low, and then I look at this one. I'm going to ignore this one just for a moment because I don't think it's of great significance here, but I think this one is more. Of course, looking to the left, the view is always, always, always much clearer than trying to figure out what is going to happen on the right. Now, in this case, we have the benefit of seeing what happens on the right, but you see this pattern repeating over and over and over again. You could go back to last year, to last decade, to the beginning of the year 2000. You can go back as far as you want and you see these patterns or this particular pattern repeating often. So let's get back to this. We've got a low here, we've got a lower low here, and then we've got a lower low here. So Can we confirm that we have lower lows? Absolutely. Yes, we can. The highs are a little bit more uh, challenging here. So there's a previous pivot high. There's the next pivot high. Okay, so you can see that this previous high comes in around 607 and change, and then this high comes in a little higher, 607.97. Slightly higher, but technically higher. Then we look at this one. So in this case, our close here is 610. So we actually have higher highs. So now it's a bit of a confusing situation in that we have higher highs, but we have lower lows. So what I would do in that case is I would actually wait for this trade. I would take note of this, put this on my watch list, and what I want to see is a break below a newly established pivot low. That is my new level of support. So you can see this 3-bar pattern here. Let me see if I can zoom in a bit more for you so you can see it a little bit more clearly. So you see that 3-bar pattern starting on the 12th of March. So remember, Liberation Day was April the 2nd. We're well in advance of what happened on Liberation Day, and we're going to catch both of these gaps down, and I'll show you how. So there's our 3-bar pivot low here, the pivot low being the 14th. So we start on the 12th, we get the low on the 14th, and then we have a little bit of this, I'm sorry, the 13th, and then we have a little bit of this move to the upside on the 14th. So now, if we look here, there's a pivot low, there's a pivot low, and there is a pivot low. Now what happens is I want to see a pivot high that is lower than the previous pivot high. So I look to this one. If you recall, this is the one that was around 610 or so. And now on this bar here, there, on the 25th, we have a very clearly defined lower pivot high. So now we can confirm that we have lower lows and lower highs. So my entry, and this is the 20-day simple moving average, my entry here would be on a break of that 3rd bar in that series where we establish a new lower high. Okay, so when I break the low on this bar here, on the bar of the 26th, that is my entry here. So there's my entry on the 28th of March at a close right around 567 or so. And you can see the next day, we really come down a little bit, come down hard, but the next couple of days, we're kind of in a sideways pattern. And then, of course, we get this wash on the 3rd of April. April 2nd was Liberation Day. On the 3rd of April, we have this gap down. Then we also have a second gap down. So if I were trading it, if I'm looking back on it, the way I would trade this is with, and again, this is very risk dependent. So and I'll give you my style. I like to collect theta on options because I don't know if this is going to gap down or if this is going to go into a sideways pattern like this here. So while I'm confident on direction, I'm less confident on speed and acceleration. And I want to give myself, and I want to give the trade the time that it needs to work itself out. So in this case, it doesn't need a whole lot of time. It needs a couple of days, and then we have that wash. So just going out and buying out of the money puts, especially in an environment where you had this happen, you are definitely going to see a spike or an increase in the premiums on the puts. Because what happens in cases where the market is starting to sell off is that there is a greater demand for puts, much greater than when the market is grinding up and the demand for calls in that situation. So To offset that, what I typically like to do is I will do put debit spreads. So in this case, buy something at 550, but then sell something at 540 or 530. That neutralizes most of the theta on the trade, and it gives the trade a chance to work itself out. And in this case, you can see we would get to pretty close to max profit pretty quickly. And in those cases, when you get these gaps down, what I would then consider is rolling that spread out to either the next strikes or to the next expiry. And that's the way I would play this move when it breaks the support that we have on once we get the once we establish the lower highs. To be extra safe, you can wait. You actually can wait for a break of the low of this bar, and that you're not far from the entry here. So this, I would say, is somewhat aggressive. This is a little bit more conservative. You have a bit of anxiety here because the next 2 days you do go up a little bit, but you can certainly use the 20-day simple moving average as a bit of a guide and as a bit of a support post to see if it holds support there before you get that rinse to the downside. Now, let's look at the upside. Let's look at the cues and see where we would have turned and how we would have handled that. So let me bring up QQQ. I got a little excited there and put in many different cues. And let's see if we can bring it up this way here. And I don't believe this is the one we're looking for. So let's try that one more time. And here we are. So the cues, very similar pattern that we just saw in SPY. You can see that pivot high there. We establish the new lower high, and then we get that rinse. So now on the way back, what do we do? Let me bring this into a little bit more focus here for the group. And again, as I mentioned, the red bars all indicate I'm sorry, I'm trying to zoom in at the same time. The red bars all indicate short trades, the green bars are long trades. Okay, so we get this long that now appears on the 9th of May. We're past all of the noise from Liberation Day. Now let's look at this again carefully through the lens of support and resistance, and specifically through the lens of, do we have higher highs and higher lows for this trade here? So I would say that this is a high here on the 9th of April. And then we get our next pivot high there on the 2nd of May. The lows are a little bit easier. There's a very clearly defined pivot low here, clearly defined pivot low there. And then we can say there's a not very well defined, but there is a pivot low there. In this case, the turn from negative to positive or from bearish to bullish is a little bit easier when we get our signal. We don't have to wait for anything. The only thing that I would hesitate with is the position of this bar here. So on ETFs, on my entries, all things being equal, I like to have no more than a 5% drawdown as my risk tolerance level. So in this case, with the NASDAQ being at 490 or so, close at 480, I call it 490. I don't want to be exposed by any more than about 25 points. Okay. And we get a bit of luck on our side here because as soon as we enter, we get a nice gap the very next day. And if we were trading short-term options, which again, I prefer not to, especially for daily timeframes, only because the theta decay on these short-term options is so significant that if you get even a slight pullback and you see that a little further ahead, that your options have a very difficult time recovering. So my preference again would be, and if you recall, going back, your mindset here yes, we've seen a bit of a recovery, but the media is still bombarding us with news about tariffs and the economy and employment and this and that and the third. So it's very easy to look back and say, oh, I just what about a weekly expiry option and look at all the money I would have made. Absolutely. For me, it's a little higher risk. So again, I would just go with a slightly out of the money or slightly in the money long call paired with a short call, making for a call debit spread. And then once you get that first gap, I would actually consider rolling out on that gift that you get the very next day. And then as you're just carrying this trade forward, every time you get close to being 80% in the money, or if your expiry is 60 days out, and even if you get to 70% of the money, I would take some profit and then take part of that position and roll it out to the next trade. What happens if you close out the full position here is you miss this entire run up and you don't know if this is going to be the end of the run or if this is going to be the end of the run or if this is going to be the end of the run and we're still not at the end of the run here on the 24th of July. Okay. So that is the way I would use support and resistance to increase my accuracy on entries. In a future video, we'll talk about adjustments and we'll talk about exits as well. We'll see you then.